All right, so on December 22nd, I uploaded a video talking about how you can get 42% dividend yield on ftn.to, Financial 15 Split Corp. As you can see, December 22nd, it was trading at $3.50. It actually went lower. I think the lowest was 3.27. So you can see here, 52-week range is 3.27. Now, sadly, I missed out on it because I wanted to sell a bunch of positions before buying into it, and then it quickly went back up, and right now it's trading at close to $8. So obviously when the stock dropped all the way down to 3.5, it wasn't paying dividends. So this is a mutual fund from the company called Questrade. It pays monthly distributions as long as the net asset value is above $15. So it's got two different shares. It's got preferred shares and it's got class A shares. The shares that are trading on the Toronto Stock Exchange are the class A shares, ftn.to, and they fluctuate obviously with supply and demand. So how it works is this company, this mutual fund, invests in these great companies here: Bank of Montreal, Bank of Nova Scotia, CIBC, National Bank, Royal Bank, Manulife, Sun Life. So great banks and great insurance companies. And they've got some US companies as well: Bank of America, Citigroup, Goldman Sachs, JP Morgan Chase, Wells Fargo. So most of their allocation is into these stocks. So they're collecting dividends on these stocks, capital appreciation, but the way that they're able to pay out these great dividends or these great monthly distributions is by selling covered calls. So by writing covered calls on their positions, they're able to pay these great distributions. So for preferred shares, the dividend yield is about 5.5%. For class A shares, well, it depends. It's about 12 cents per month, or 12 cents per share. So obviously it depends on what price you buy the stock, because they pay 12 cents regardless. So if you buy the stock at $8 or if you buy it at $3, you're going to get a different yield. So if you had bought the stock on December 22nd, like I mentioned in the video, or on the day I spoke about it in the video, if you had bought it at 3.5, they suspended distribution for 1 month only. So if we go to distributions here, so December they didn't pay anything, but January they paid, and I received it in my Questrade account. So you would have gotten 12.5 cents per share if you had bought it at $3.50. So 12.57 divided by $3.50, that's 3.5% per month times 12. So that's 43% dividend yield per year, 43% yield on cost if you had bought this stock at 3.5. Not only that, but you would have had a capital appreciation of more than 100% or even 200%. So 7.92 divided by 3.5. So you would have had a capital appreciation of 126% in not even 2 months. So 43% yield on cost plus 126% capital appreciation if you had bought this on December 22nd, like I talked about it in my video. I didn't even buy it. I'm disappointed in myself because I was actually thinking of selling a bunch of stocks just to put everything in it, but the hesitation made me waste time and I didn't take any action. So right now, if you buy into this mutual fund, it's a yield of 19%, and as long as net asset value is above $15, it's going to continue paying the monthly distribution. So in December it dropped below 15, and that was the only time it didn't pay recently. So since the beginning, since its inception, or since it's been paying out distributions, as you can see all the way back to 2003, it's been paying distributions monthly. So since 2003, so almost 15 years, 16 years, it only missed distributions between 2008 and 2009, so about a year, and then another period here, 2011 and 2013, so about 3 years. So out of 16 years, it suspended distribution for about 3 years, actually a little bit less than 3 years, because it's June 2011 until January 2013, so a year and a half here, and then you've got from November 2008 to May 2000, so about 7 months, so about 2 years actually. So I exaggerated when I said 3 years. So out of 16 years, it didn't pay distributions or dividends for 2 years, plus 1 month here in December 2018, the crazy correction or crash we had in December. But yeah, taking advantage of that price, I don't know who bought it at $3.50, but they're definitely lucky, getting 43% yield on cost plus a 100%, over 100% capital appreciation. So right now, So the only issue with this stock or mutual fund is that if you buy it at this price, you're actually buying it at a premium, because if they decide to terminate the shares, if you buy it at $8, what it's trading at right now, it's actually worth net asset value minus $10. Net asset value being $15, and $10 is what they pay to the preferred shareholders, which you can see here, and the difference they pay to the Class A shares. So currently you'd be getting about $5 or $5.61 for something you paid $8 for. So obviously it's trading at a premium because it's a stock that's very wanted because of the yield that it's generating, 19%, and also it's very consistent in generating it. They actually have another product that's even more consistent, that's never missed a dividend payment, which is the Dividend 15 Split Corp, DFN.TO. This one pays 10 cents per share, and it's never missed a dividend distribution. And right now, this stock is yielding about 14% or 13% yield per year if you buy it at the current price. But you also had a chance to buy it at around $6 or $7 in December, which would have generated a crazier yield. So for those who love dividends, and whenever I post a video on dividends, I notice that view count is higher than the other videos. So I guess a lot of people love dividends. So if you love dividends, these two stocks, DFN.TO and FTN.TO, are something to watch if there's a correction or crash coming up, because if you could buy them cheap, you can get a crazy yield on them. FTN, for example, just not even 2 months ago, you could have gotten it at 3.5 and you would have a 42% yield right now. But the thing is, they don't move much. Like long term, they always trade around $10. So compared to a bank stock that pays 4% dividend yield, you have a better chance of capital appreciation with a bank stock. So if you buy it at $10, it doesn't move much. But obviously, if you buy the stock at 3.5, then you've got your capital appreciation and you've got your crazy dividend yield. And basically, it's a mutual fund that buys quality stocks, as you can see here, collects the dividends and sells covered calls or writes covered calls in order to collect more income and pay out the distributions. I really wish I had bought more FTN. I think I have 165 shares of FTN. I wish I had bought more when it dropped to 3.5. I think the last time I bought it was around 7. So I definitely missed out on it when I talked about it at 3.5, but didn't buy it at 3.5. So if you notice my videos, I have a lot of videos on writing covered calls, and that's a reason why I try to implement the strategy of writing covered calls, because I know it works. This company here would not be able to pay their crazy dividend yield without writing covered calls. So covered calls is definitely something that is worth investigating because it does generate more income. So if you do it right, it can be very profitable. And I say to myself, why give my money to this company and get a 10% yield when I could do it myself, write covered calls and collect even more? So obviously giving them your money would be more passive, but if you don't mind putting in a bit of time to collect more, then writing covered calls yourself would be a good strategy. I'm still trying to get the hang of it. So yeah, this mutual fund here, FTN.TO, has an expiry date of December 1st, 2020. So if they decide to end it, you'd get the difference between the net asset value minus $10. But in most cases, they just keep renewing it for 5 years. They've been doing that since inception because it's such a popular stock. What's crazy though is that I'm trying to look at the covered calls that they're writing, they're probably buying other stuff. See, they say here 15% of net asset value may be invested in equity securities other than the core holdings. So that's probably how they get their covered calls, because when I looked at the covered calls on these stocks, they generate barely 1% per month. So if they're collecting 1% per month on the covered calls that they're writing for these stocks, that's about 12% a year. So how are they able to pay a crazier yield? So yeah, they're probably doing it on other stocks that's not really mentioned here, or Goldman Sachs. I know Goldman Sachs gives pretty good, or has pretty good call premiums here. Let's check it out. So Goldman Sachs 191.67. If we look at the options, if we look at monthly options, let's say March 15. Okay, let's look at March 22nd. So 191.67. If we look at the 192.50, you'd be able to get about, let's say 580. So 580 divided by 191.67. Yeah, so that's about a 3% per month return by writing covered calls on Goldman Sachs. Yeah, so they're probably not writing on Canadian bank stocks. They're probably writing on the US equities and maybe some other equities that are not mentioned here. You could look at their prospectus. They have everything. They have their fees, how much they charge, how they're able to generate the yield that they're generating. So it mentions in their prospectus that they write covered calls and everything. It's pretty useful stuff if you want to read it. But yeah, so in general, it's a mutual fund, and the company is based in Ontario. They buy quality stocks, as you can see here, and they just collect the dividends, write covered calls, and that's how they're able to generate or pay out the monthly distributions. But yeah, so I'm definitely keeping an eye on FTN and DFN.to in case there's another crash or correction. I'm not going to make the same mistake twice. Look at this, 3.27. If it drops again to these prices, I'm definitely going to put more money into it to collect a crazy yield and a nice capital appreciation. I just wonder though, am I going to sell, or am I going to keep it and just keep collecting the dividends? At 40% per year, I'm definitely going to keep it, because there's nothing I could do that will allow me to generate 40% per year. I just imagine, because I remember at that time my portfolio was around 50,000. If I had taken all of the 50,000 and put it in FTN.to, which of course would have been risky, I wouldn't have been able to do it. But imagine theoretically if I had done that, bought it at 3.5, I'd be collecting 43% per year on 50,000. So I'd be collecting 21,500 per year. I'd be collecting 1,700 per month on a $50,000 investment. Not only that, but my 50,000 would be worth about $112,000 right now. So yeah, I think it's important to keep watching your stocks, because you could miss out on some good opportunities like this. So yeah, just wanted to share that with you guys. If you have any questions, leave them in the comment section below. Like always, if you're going to open an account with Questrade to trade on the stock market, use my referral code in the description below the video to get between $25 and $250 back, depending on your deposit. Also check out the other referral links I have below. They have nothing to do with investing, but they help support the channel if you use them. Thanks for watching.